Good evening, I'm Giuseppe Basile, I'm the essentially you can find at the website www.vipstalker.com. I also post regularly on Twitter using that Vipstalker nickname. Good evening, today is now May the 15th, it's 10 past midnight in Toronto, and so it's Thursday, and in this video I'm going to review for you the Japanese majors, the US dollar versus Japanese yen, the euro versus Japanese yen, and the pound versus Japanese yen. This is a daily update which actually updates my view on Monday and actually gives an updates based on the weekly review I provide to my free newsletter subscribers every weekend. What you see on the screen is the US dollar versus Japanese yen, and you will remember that on Monday I mentioned that we had a level of resistance here, a potential level of resistance. That level of resistance clearly materialized today, and this is Wednesday bar. This is the new bar being formed already, and there was a way, of course, to use the Phipps stalking technique. Every time we have an area of potential area of resistance, we can use the Phipps stalking technique to study the sequence of measure move on the shorter time frame of in this case of these three red bar on the daily red bar. So what we do, we study the sequence of measure move, and if we get a violation of the sequence, then that's a signal to enter short. And let me show you on the 15 minutes here. I want to remove this these traces here, and actually we can see here the 102.21 area of support, which resistance, which shows this level here where the area of resistance started. And if we study the sequence of measure move before we get into this area, so we would have seen in the morning here that there was a traditional measure move which found support with a small front run here at 101.82, and then price was actually pushed higher into 102.14 first target and 102.30 here. And at that point this market was actually within this area of resistance, so it was very important to study the next measure move in the sequence. So I'll just remove this line to not to cause confusion, because we know we are in an area of resistance here. So when we trace the next measure move, we could see that initially this market tried, program trading tried to pick this market up, but participation on the short side was so strong because we were in that area of resistance and participation short from program trading, that it actually triggered a short in this market, and the short was 102.15 with a stop above highs. So the market went to retest, tried to retest those highs, never got there, and that's our bread and butter. That's the kind of trade that is important to take, and it's easy to take. It takes stress out of the trading process, and even if you don't follow during this period of time, more often than not, but that's not something you can count upon, the market will come back and offer you a new opportunity for entry. So if you entered 102.16, this market would have given already a 2 reward to risk. If if the market continues lower and tests the 101.58, that would be the area where I exit with a 2.7 reward to risk for this trade. So this is the kind of trade we have to look at, and of course you want to keep an eye also on what's happening on this time frame as well. So we had a measure move short, an extension short here, which did not bring price into first target. So I'll keep using this 101.92 as a level of resistance here, an entry short. As we could see here, this is still valid, and only if we price gets above 101.98 this trade short can be exited, probably with one reward to risk here. So it's a very good trade. It's a trade you can take without stress, because you know you know always what is the entry, and you know always what is the stop, and this is the 15 minutes, so the market gives enough time for you to get organized even when it moves fast, like it happened here. So moving to the euro versus Japanese yen, the situation in this market is slightly different. This market gave a false long here, and actually this market went to trade quite an odd value there. So on Monday I said if you want to get aggressive, to be aggressive, you could trade this one with the breakout from 140.29 here on the upside, and then in this case you would have a free risk trade here. If the market continued higher, that would be that would have been a very good trade. However, I recommend something different because I always want to be sure. Of course, sometimes you know, and that's part of trading, you pay the price for that. 140.46 never went to give us a free risk trade, and there is quite an interesting level that traded here. It was not this spike. There was maybe maybe procured by some sort of high frequency trading or other algorithms, but it was the previous high before this before that spike that traded. That's 140.94, and this 140.94 has targets below. So let's see if we put 2% here as target at this 39.38, but this was not touched just yet, so there is a possibility for this market to just continue lower and you know, test this level, and then we need to see whether we get another measure move in the sequence. When it comes to the 15 minutes here, we can see that there is also a traditional measure move here, which we could 139.86. The high was 139.82, so this has traded for pips, and so there is a possibility for this market to continue lower on this time frame, so and to go to that 139.38. So the target here below, let's see if we can look at the target. As definitely 2% is too much, so the first target is 139.26, so this would be aligned with 139.38, would be a little bit lower than this level. So let's see what happens in this market, and now if this level is broken on the upside, this could be an initial confirmation that this area of support is actually, you know, started supporting price, but the market could just slide, continue lower here. And if we lose this 139.11, there is a potential for this market to retest the all the way halfway back here into 137.72. Of course, not before we get a of course, it is possible that we get before a bounce, which could be a tradable bounce in this case. So this is it for the euro versus Japanese yen. Moving to the pound versus Japanese yen, and starting from the daily, this market lost one of the area of support, which was lows to highs here. This area actually provided support initially, but eventually today price broke below this level, and it's now testing another level of support. See, we don't have to worry about which level this market is testing. Actually, this is not the actual level, but the actual level is the level that we trace when we identify the consolidation in this market. So if you want to see how identify consolidations in the market, you can review the weekly the video of the weekly review, and I'll be very clear there the way I go with that. So there is this level of 170.44. So this level is at the moment is offering support. Of course, we will need to study this support more careful here, and I'm going to remove this scale. And one thing it's clear on the 4-hour chart, just the last 3 days here, is that initially we had traditional measure move here with a resistance at 172.31 level, which progressed into first and second target, and so there are now two levels that are very important to watch. The first one is a traditional that it has found participation at this 170.89, and the second one would be the full all the way halfway back. As you know, I'm very conservative, although I always want to see a stronger participation. So if this price is able to move above 171.34, then there's a possibility for trading a retracement, whatever will be the high here, and that's where we're going to pick up this market. I hope this video is useful. I wish you a very good evening and night, actually now. A very good trading day tomorrow. Tomorrow is Thursday, so still okay. Volume is there, program trading is active, and starting new position, it's not the best day. The best day are Monday and Tuesday, so be very careful and maybe trade on the smaller time frames. Thank you very much for your attention, and have a great evening, and tomorrow a great trading day. Bye bye now.